It has been just another absolutely gorgeous day here on Florida's Space Coast. It is still hot and sweaty, don't get me wrong. That's stereotypical for this time of year in Florida, but the humidity is down just a little bit from where it had been. It was just absolutely oppressive the last several days, and so that's a nice change. The beach side is absolutely packed with tourists for the looming 4th of July holiday, so along those lines, I fully expect this podcast to be mildly inconvenienced, if not flat out cut short, by the sound of fireworks popping off outside as it gets a little later. Despite the fact I'm indoors, some of the artillery that the tourists and the locals pop off around the 4th of July are really impressive. Sometimes the amateur show on the beach is as good or better than the professional shows that they put on. And technically fireworks are illegal in Cocoa Beach, but they sell them all over the place, and you have to sign a waiver basically saying that you promise you're using them for agricultural purposes to scare birds away or whatnot. But that doesn't appear to stop anybody because it just gets absolutely insane out there, and it already started a couple of nights ago. So I fully expect to hear an occasional pop boom in the background that makes it through the noise canceling I'm running and inside the building, no less. But hey, unless you are one of the unlucky ones who wakes up tomorrow with one or two less fingers, that is the sound of freedom.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. As I alluded to in the introduction, tomorrow is July 4th, the 4th of July, which is Independence Day here in the United States. That celebrates the day that the Declaration of Independence was signed on July 4th, 1776. Predominantly written by Thomas Jefferson, but written by others including John Adams, Benjamin Franklin, Robert Livingston, and Robert Sherman. The Declaration of Independence was the official notice to King George that the 13 American colonies were declaring their independence from Great Britain, and it establishes the United States of America as a sovereign nation. It, amongst other things, asserts that all men are created equal and they are endowed with certain inalienable rights, including life, liberty, and the pursuit of happiness. And it lists specific grievances against King George III and the British government, including taxation without representation, the quartering of soldiers in homes, and denial of trial by jury. Of course, it was signed on July 4th, 1776 by 56 individuals representing the 13 original colonies, including John Hancock, who signed in absolutely oversized signature, which is where the phrase "signing your John Hancock" comes from. Some of the key phrases, some of the things that were outlined specifically in the Declaration of Independence were the phrases, "We hold these truths to be self-evident that all men are created equal, and that they are endowed by their Creator with certain unalienable rights, and that among these are life, liberty, and the pursuit of happiness." And it goes on to say that whenever any form of government becomes destructive to these ends, it is the right of the people to alter or abolish it, and to institute new government, laying its foundation on such principles and organizing its powers in such a form as to them shall seem most likely to affect their safety and happiness. Of course, you have the phrase that all men are created equal and that they are endowed by their Creator with certain unalienable rights, among these are life, liberty, and the pursuit of happiness. And oh, how far we've strayed in the more than 200 years since that document was written. But do not give up hope, because it is absolutely fitting that in the more recent years, people all around the world have been given the tool to declare their financial independence and sovereignty through Bitcoin. All right, there is a lot of news to talk about today before we get interrupted by the fireworks barrage that I anticipate will start any minute now because it's getting dark out there. But before we do, let's take that customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 850,590 and Bitcoin is ringing in at a US dollar value of $60,290, which means that we will receive 1,659 sats for every fiat dollar we convert to Bitcoin. I know a lot of people are panicking that the price of Bitcoin tanked last night, but if you zoom out, it's basically about $300 off of where we were when we recorded last DCA Wednesday. And if nothing else, we're going to receive about 15 sats per dollar more for each fiat buck that we convert into Bitcoin today. So that is cool. But basically, if you zoom out, we're sitting exactly where we were for the last 2 weeks. That's one of the things I like about doing DCA Wednesdays once weekly is it enforces that zoom out perspective. If you're staring at that price chart every day, Bitcoin has been on an absolutely nauseating roller coaster ride. But if you zoom out, which we do by doing this podcast once a week, you see that Bitcoin it's in that crab market, like Dr. Jeff Ross likes to say. It's basically just been going sideways. Bitcoin's current price gives it a market capitalization of $1.19 trillion. For those paying attention to that sort of thing, that still puts us significantly above the $1 trillion mark, which is that nice magic number that I think it kind of officially puts Bitcoin in the mainstream financial media as a world-class asset, as a force to be reckoned with, something that they can't ignore or make fun of when it was in the $500 billion range or the $300 billion range, like it was last fall before we had the ETF approval and Bitcoin's price started pumping. For those of you who value your wealth in shiny yellow rocks, it will currently cost you 25.9 ounces of gold to purchase just one Bitcoin. That's more than 25 Spanish doubloons, more than 25 double eagles, or whatever denomination of 1 ounce gold coin you gold bugs like to hoard in your safes. And for those of you who value your wealth in pizza, one of those Bitcoin theoretical, not shiny yellow coins, but digital coins will purchase you 3,371 large pepperoni pizzas from Papa John's. That is a pizza a day for more than 9 years. A heck of a lot of pepperoni pizza, a heck of a lot of food security. And of course, I firmly believe that if you were to take one Bitcoin and try and spend it eating one pizza a day, we've already reached the point where you will never be able to spend an entire Bitcoin buying one pizza a day, because 9 years from now is multiple halving cycles, and each halving cycle has stair-stepped Bitcoin's price up and to the right, never to return from whence it came. And so if Bitcoin stays at $60,000 for this cycle, you'll have eaten 365 pizzas. You'll have eaten 1,200 pizzas of those 3,000 pizzas before we get to the next halving. And then if Bitcoin price runs up 4x, 5x, 10x, you will all of a sudden be staring at decades worth of pizza for what do you have left of that one Bitcoin. And then you'll have the next halving cycle 4 years after that. And I'm getting a little redundant here, but I firmly believe if you had one Bitcoin today and you tried to spend that Bitcoin eating just one pizza a day, you will never run out of Bitcoin. So that's really cool that you basically have infinite, unlimited food security, at least once a day, one meal a day, if you've stacked just one Bitcoin. The metric that I like to follow, Bitcoin's 24-hour average transaction rate, is up just a tiny bit from last week, still down quite a bit from where we were when Bitcoin's price was pumping. Last week, we saw an average of 5.94 transactions per second on chain, and right now that average is 6.58 transactions per second. As you know, when and this isn't any kind of official transaction analysis, they say correlation doesn't necessarily equal causation, but we've been doing this podcast for almost 3 years now, and pretty much without fail, every time we've done this podcast and the on-chain transaction volume was going up, so is the price. And right now we've got the average transaction volume kind of about the same as where it was last Wednesday, and the price is about the same as where it was last Wednesday. So it was just an interesting observation that I've made in the last 3 years of hosting this podcast, but I find it interesting if nothing else, even though nobody has a crystal ball. Nobody can predict what the Bitcoin price will do especially off of, a metric such as on-chain activity, but it's fun to look at anyway. Speaking of on-chain activity, Clark Moody's dashboard mempool is clearing out. It isn't cleared out, but there's about 48,000 transactions fewer in that mempool than there were last DCA Wednesday. Currently 120,647 transactions pending in his mempool. That is a heck of a lot of transactions, but it is trending in the right direction. And remember, a lot of those aren't even Bitcoin transactions. They're spam transactions, those ordinals and inscriptions, etc. Mempool.space operates a slightly larger mempool. As usual, their transaction volume exceeds that of Clark Moody's mempool, but it's also down about 21,000 transactions. There are currently 195,995 transactions pending in the mempool.space mempool. And that's the first time scrolling back through pages and pages of my notes that was under 200,000 transactions. Last week, for example, it was 216,676 transactions. So it's nice that some of those spam transactions hopefully are fading away. Along those lines, if you want to guarantee that your on-chain transaction is included in the next block, it is a little bit cheaper than it was last week. Clark Moody's fee estimator is saying that to guarantee an on-chain transaction is mined in the next block or so, you need to include a fee of 10 sats per VByte. That's less than half of what they were recommending last week when they were recommending a fee of 25 sats per VByte. And they're saying that a fee of 7 sats per VByte will be mined within a day. That is about as cheap as I've seen it in a long time. It's in fact the cheapest I've seen it in months, scrolling through several pages of notes. And if you have up to a week, they're saying a fee of just 6 sats per VByte will eventually be mined. And mempool.space usually tells a slightly different story, but they're telling a story that kind of matches. They're recommending a fee of 9 sats per VByte for a high priority transaction. That's exactly the same as what they were recommending last week. And that works out to about 76 cents, which is really, really cheap, considering you can send basically almost an unlimited amount of money anywhere in the world within 10 minutes, and that nobody can stop you from doing so. And they're saying that a medium or low priority transaction should also have a fee of about 9 sats per VByte. But a no priority transaction, if you don't mind waiting a while for your transaction to be mined, for it to be confirmed, they're saying that you can use a fee as low as 4 sats per VByte. That is also the lowest I've seen in, it has to be at least a year now. And that's pretty exciting. So maybe some of that FUD, the high priority FUD, the high fee FUD is fading a little bit. Maybe some of the spam on chain is fading a little bit, or maybe it's just that, the price is down and so the euphoria is down. And that remains to be seen. But if you have some transactions that you were panicking, that you wanted to consolidate some UTXOs and you didn't because fees were through the roof, if you could consolidate those UTXOs for as little as 4 sats per VByte, now might be the time. Again, do your own research. Make sure you know what you're doing when it comes to doing on-chain transactions, that you know what you're doing when it comes to estimating what fee you should use, and that you're using a wallet you're comfortable with and a wallet that will let you change that fee with replaced by fee or child pays for parent, etc. If you do want to lowball a transaction so that if it doesn't get mined, if fees go through the roof, that you don't get stuck waiting forever or with a transaction that never ultimately confirms. And speaking of on-chain, we are just 162 blocks away from the next mining difficulty adjustment. That looks like that's going to be tomorrow, which will be about the 4th of July, maybe as late as the 5th of July. Actually, it looks like that's going to be about 2 days from now. We get about 60 transactions per hour. So it's looking, I don't know. Clark Moody's saying it's going to happen today. So it's going to happen imminently. But when it does, it's looking like it's going to be a rather significant difficulty decrease. Depending where you look, it's going to be a decrease anywhere between 5.1% and 5.38%. So another significant decrease as hash rate appears to be coming off the network, probably because we have large mining companies getting ready to take delivery of those vastly more efficient miners. So maybe they're turning off some of the miners, and also because it's really, really darn hot. And in the summertime, is when you see those large commercial miners in places like Texas that have those load balancing agreements turning off some of their miners so they can sell power back to the grid to prevent rolling blackouts. Who knows? But again, that's one of those zoom out things. In general, hash power has been going up and to the right. And, we're still looking at more than 500 exahashes of power securing the network, which is just unfathomable considering where we were just a cycle ago when we were talking petahashes to secure the network. Of course, all of that is because blocks are coming in at an average of 10 minutes and 33 seconds, which is significantly slower than the 10-minute block time that the Bitcoin protocol averages, that it shoots for, that it wants to average. Obviously, if blocks are averaging more than 10 minutes over the 2016 block period that the protocol takes into account when it's determining whether to adjust the difficulty upwards or downwards, leave it where it is. If they're coming in slower than 10 minutes, then it gets easier to mine the next block of Bitcoin. It wouldn't if they're coming in faster, like they were a couple of weeks ago. Then you have a difficulty increase where it gets harder to mine the next block of Bitcoin. That's part of the genius of Satoshi Nakamoto. Part of the genius of the Bitcoin protocol is that, if the price of Bitcoin fluctuates and the hash power of Bitcoin fluctuates, in relation to the price, or in relation to other events such as mining bans when China banned Bitcoin mining a few years back, or with heat waves and high electric demand where miners have to shut down. That's just water off the duck's back as far as Bitcoin is concerned. Tick-tock next block, Bitcoin makes its little difficulty adjustment, and things keep rolling on. And they've been rolling on for more than a decade, regardless of the FUD, regardless of different countries attempting to ban Bitcoin. Well, it wasn't just China. We had Venezuela confiscating miners, and other countries. You remember, I forget what country it was 4 years ago, where they showed the steamroller rolling over a bunch of Antminer S9s, thousands of them. Point being, tick-tock next block, Bitcoin doesn't care, then Bitcoin rolls on. Real quick, I want to take a minute to thank those of you listening on your favorite podcasting 2.0 apps, such as Fountain or Breeze. Fountain, for example, lets you not only earn sats for listening to your favorite podcast, but it allows you to help support your favorite podcast through the value for value model. And the value for value model allows podcasts to broadcast without having to sell their soul through sponsorships or commercials. And you get to determine what you think those podcasts are worth. And you can do so on a minute per minute basis, where you say, I think it's worth 1 Satoshi per minute to listen to this podcast, or 10 Satoshis per minute to listen to this podcast. And you just set it and forget it and stream sats in real time as you're listening. Or you can send a boost where you're sending a message to your favorite podcast, but it's a lightning transaction. So basically it's like sending a shout out, but it comes with some Satoshis. So thank you for all of you listening on Podcasting 2.0 who have supported the podcast in the past and who continue to do so. Speaking of you listeners, our geographic distribution of listeners has not changed this week. We had a little bit of a shakeup last week and a couple of weeks before that, but this week remains exactly the same as last week. The top 10 countries by listener are as follows: the United States of America, where more than half of you are listening, and where hopefully you're gearing up to have a great 4th of July weekend, whether you're just doing a barbecue at home and lighting off some fireworks, or whether you're here at the beach. So thank you to all my fellow Americans taking the time to listen on this most patriotic of holidays. Number 2 remains Argentina. That is just incredibly flattering to me, because that's one of the countries where I think Bitcoin can do the most good. So muchos gracias, amigos, in Argentina. Number 3 remains Germany. So Dankeschön, mein Freund in Deutschland. Number 4 remains Canada. I think they moved up to the number 4 spot last week. So hello to our friends in Canada, where you just celebrated Canada Day the other day, which is not quite the same as the 4th of July here, but similar enough. So happy Canada Day to all of you listening in America's hat, in the what we jokingly refer to as the 51st state. Number 5 remains Luxembourg. So Morien to those of you who speak Luxembourgish, or Dankeschön, mein Freund in Luxembourg, to those of you who speak German. Number 6 remains Spain. Muchos gracias, amigos, in Spain. Number 7 remains the United Kingdom. They clawed their way back into the top 10 last week. So thank you for remaining in the top 10 for those of you listening across the pond in the United Kingdom. Number 8 remains Venezuela, another country where I'm super flattered that we have listeners, because Once again, that's another country where Bitcoin can be way more useful, way more valuable, way more important than it is to a lot of us listening in the United States and Europe. So muchas gracias, amigos, in Venezuela. Number 9 remains Colombia. Again, hola, muchas gracias, amigos, in Colombia. And number 10 remains Mexico. Once again, hola, bienvenidos, muchas gracias, amigos, listening in Mexico. And thank you to all of you listening, regardless of where you're listening from. I only read the top 10 countries in general, but there are a few countries hanging down there at the 11 and 12 positions that are just barely below the threshold for breaking into the top 10. So if you are listening in Australia or one of those other countries that are really close to breaking into the top 10, again, while you're orange pilling friends and family, if you turn them onto this podcast, help one or two more people from your country listen to this podcast, maybe you can break into the top 10 as well. All right, on to the news. It seems like what most people are talking about is the economy in the United States and the price. Of course, outside of the news, we have the disastrous presidential debate affecting the potential election cycle, with the Democratic Party and the media now seemingly turning on Joe Biden and demanding that he resign, that he step aside and he let someone else run. And I'm getting a little bit ahead of myself. We're going to talk more about that in a minute. But I just want to remind everybody to zoom the freak out. The price of Bitcoin actually isn't really down. Sure, it's down from that all-time high we set right after the halving, but we're actually significantly higher than I would normally have expected to be at this point. If you remember, I've said many, many, many times on the podcast leading up to the halving that if this were a normal cycle, if history were to repeat or to have rhymed, we would have expected Bitcoin to be priced about 3 times whatever the cycle low was. In general, the cycle low being, the $15,000, $16,000 range. So at the halving, if that were to have been the case, we would have expected a Bitcoin price of $45,000 to $48,000. Still significantly lower than we are right now. Instead, we got euphoria. We had the buy the rumor when people were anticipating that the ETFs, the spot ETFs, were going to be approved, and we just had a tremendous price run up, double almost where we normally would have been had this been a normal cycle. But in general, normally we would have expected to be around $45,000 to $48,000 on halving day. That would have been in keeping with tradition if history were to repeat or to have rhymed at the previous cycles. After that, after every halving cycle, we've always experienced a little bit of volatility. In general, price goes down a little bit after the halving day, but then it kind of slopes gently back up, and we see kind of that bull crab market where it goes kind of sideways, but with a little bit of a gentle increase in price throughout the summer, and that ultimately, it would continue just a gentle rise, maybe a steadily increasing rise, but a gentle rise nonetheless, with Bitcoin not retaking its all-time high till sometime in the late fall or early winter. I've said perhaps around Thanksgiving or maybe as late as Christmas before we would have set a new all-time high. So what was different was that we had somewhat of an increase in demand because of the ETFs. But remember, a lot of those massive inflows were completely offset by the massive outflows of investors finally able to dump their GBTC shares. After all, they'd literally been suing Grayscale for the right to cash out for quite some time prior to the ETF conversion. And when they had that ETF conversion, obviously the need to sue Grayscale to allow them to convert their shares and get the heck out went away. And so on many days, even when we had a positive inflow, it was dramatically set off by, billions of dollars worth of Bitcoin being dumped out of the Grayscale ETF. So what we saw in setting a new all-time high actually prior to the halving was a lot of euphoria. It's not dissimilar to the euphoria we see in the 4-year bull run cycle that we get after every halving, where Bitcoin sets its new all-time high, which I said normally would have happened in the fall. And then after that, it just goes completely ballistic, setting just an insane face-melting new all-time high. For example, in 2016, we had the halving and Bitcoin was less than $1,000. And then it coasted up to the $1,000 range. And then it got to $4,000, which was a really, really neat new all-time high. But then in the period of a month or less than a month, it blasted from $4,000 to $20,000 before crashing all the way back into the teens. And that's a stereotypical 4-year halving cycle. Of course, then you have the so-called Bitcoin winter, and that usually makes up about half of the halving cycle. So if this had been a normal halving, we would be lucky to be in the $60,000 range at this point, maybe getting there, but we wouldn't have expected to retake to match that previous all-time high of $69,000 until November or December. And then maybe in the beginning of 2025, that's when we would have seen that blast off to all-time record highs, maybe 100,000, maybe 200,000. People have said as high as 1 million. Nobody has a crystal ball. Nobody can know for sure, but some euphoric all-time high. And then, of course, then it comes crashing back, that 50, 60, 80% retracement to maybe $100,000 or so before we eventually bottom out, go sideways, have that accumulation phase, run into the 2028 halving, and then it all begins again. My point being, be patient, zoom the F out. This halving cycle has yet to even get started. You're going to have a heck of a 1-year run still to look forward to, beginning maybe around Thanksgiving or Halloween or Christmas of this year, and going through the first half, if not all, of 2025, at least if history repeats or rhymes. Again, nobody has a crystal ball. Who knows what will actually happen, but that's what I fully expect to happen based on history. In the mainstream financial news, I do think it is absolutely hysterical that the traditional media is already doing the mental gymnastics to blame the horrific economy on Donald Trump. After Joe Biden delivered that highly meme-worthy debate performance, I guess, if you can call it that, the Democratic Party and all the talking heads in the media that had been propping him up for the last 4 years have been in absolute freak-out mode, demanding that he drop out, wondering what they're going to do, wondering who's going to take the mantle, who's going to be running for president in November against Donald Trump. And so with the conventional wisdom at the moment, at least that Joe Biden is toast in November, those have been towing the line and pretending that, remember, we're in the middle of the best economy in 50 years, according to the media and the talking heads, are starting to float the idea that the economy is going to tank. It's going to be absolutely abysmal just as soon as Donald Trump takes over. In fact, the mere idea that he might even win the election has already started making things worse, with Yahoo Finance running the comical headline today, "How Trump is already pushing interest rates up." So, if you go to the grocery store once or twice a week, if you're paying the increased property tax on the increased value of your house, if you're paying more for cars, more for car insurance, more for clothes, more for absolutely everything, if the dollar that you have in your wallet is going half as far, not 3% as far as it did just last year, unlike what the government's official numbers and the media is, the party line that the media is officially towing, that this economy has been in recession for basically since the pandemic. But that's I guess that's a no-brainer. I shouldn't be having to tell you that because A, you're a Bitcoiner, you know the drill, and B, you go shopping, you have to buy groceries, you go out to dinner. You know that you can't quite afford to go out to dinner as much as you used to. The $5 footlong is now the $12 footlong. There's no 99-cent dollar meals at any of the restaurants you go to anymore. But I digress. None of this matters because, as I've said repeatedly, Bitcoin is hope. As Christine Lagarde has said, Bitcoin is the escape hatch. And that, for hyper-Bitcoinization to occur, other currencies are going to have to go by the wayside, and then some of that's going to be painful. But the more Satoshis you have, the less painful that's going to be for you and your family. So the really cool thing about Bitcoin being on sale this week, that Bitcoin not being $70, $80, $100,000 already, means that you still get to stack more sats while time is running out. You are still early. There is still time to get in that life raft and to take as many Satoshis with you as possible. All right, on to what makes today special. What makes today and every Wednesday special. Of course, today is Wednesday, July 3rd, 2024, and that means it is DCA Wednesday. And if you don't know what DCA Wednesday is, DCA is short for dollar cost averaging, and dollar cost averaging is the strategy we're using to fill our lifeboat with provisions It is, quote, an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. So we chose our equal portion at just 20 US dollars. And that might not seem like a lot of money to a lot of you, particularly if you're in the, in the position that Michael Saylor's in. Again, this is a you do you thing, but I chose $20 because I wanted anybody listening to this podcast to see that if they can scrounge up just 20 US dollars, that they can build an appreciable stack of Satoshis, and that they will be in the new elite when Bitcoin becomes the global reserve currency. I think we've done that already. In just stacking $20 a week in less than 3 years, we've built up a stack of more than 9 million Satoshis. And if you remember, if you take Bitcoin and you divide it by the global population, there's less than 150,000 Satoshis per person. So, if you've been stacking alongside us and you've only been stacking $20 a week, you have 9 times more Bitcoin than the average person in the world will ever be able to accumulate. And we're going to keep stacking, not the least of which in a few minutes when we make our DCA Wednesday stack. So our equal portion was $20. Our regular interval was Wednesdays, was weekly. Some people DCA daily. Some people DCA monthly. The average person makes any investment, whether it's investing in their 401k or whatever they invest in, they usually make their investments on payday. They say the smart thing is to take the money you have left over from the previous check and invest it, because now you have your new paycheck coming in. Again, this is not financial advice. This is a you do you thing. There's other people out there that say, pay yourself first. The point being, most people do their DCAing whenever they get paid. So if you get paid once a week sounds like a perfectly reasonable DCA strategy. If you get paid every other week, bi-weekly, then by all means do your DCA stack every other week. Again, this is a you do you thing. You can take half your money, a tenth of your money, whatever, split it up however you want. But we chose weekly on Wednesdays, and we chose $20. And so far in this just almost 3 years worth of stacking, we have stacked 153 times. So this will be our 154th stack. We started stacking every Wednesday on July 28th, 2021. So getting really close to that 3-year anniversary. And so far, those 153 stacks have converted a total of 3,060 US dollars into a stack of 9,515,822 sats, getting ever closer to that kind of unofficial podcast goal I had of a stack of $10 million, 0.1 Bitcoin for those of you who think of that in whole Bitcoin terms. But again, I think you should be thinking in Satoshi terms because, as Bitcoin gets more and more expensive in fiat terms, as more and more people get into Bitcoin and there's less Bitcoin available, there's only going to be Satoshis available. The average person will only ever hope to stack, a stack of that's measured in Satoshis, not measured in whole Bitcoin. And, so we talk about Satoshis. We've stacked those 9.5 million Satoshis at an average purchase price of $32,156.97, which is not too shabby because if you remember on our first DCA Wednesday, Bitcoin was ringing in at a US dollar value of $39,716. So if we'd YOLO'd that whole stack in back on July 28th, 2021, our average purchase price would be $39,000. So by DCAing, we've knocked that price down significantly, and we have more Satoshis than we would have as a result. All right, so to make today's stack, as usual, I'm going to use the handy dandy Cash App. Cash App is not a sponsor of this show. We have no sponsors. Everybody who uses Cash App has a referral code that you can share with friends and family to encourage them to sign up, and where they will get something for free for signing up. And we have one as well, and that's a neat way you can help support the podcast. Again, this is a you do you thing. I like to use Cash App for stacking small amounts. If it's available where you are and you want to use it and you're not already using it, please consider signing up using the referral code in the show notes. If you do, you'll get $5 free just for signing up. And the podcast will get $5 free as well, which will immediately convert into Satoshis. So in addition to the value for value method, you can help support the podcast and get paid to do so. Not only will you be supporting the podcast for free, you'll be getting paid to help support the podcast. There's a handful of referral codes for other services that I use in the show notes as well. Please scroll through the show notes, and if there's a service that you're thinking about signing up for and we have a referral code, you can help support this podcast and get paid to do so by clicking on those links and using those referral codes. All right, the fireworks are already starting to pop out there. They're in the distance right now. There's an Airbnb that's just catty corner to where I'm recording, and they almost always have the best 4th of July parties. They bring out the big guns, fireworks I can't afford. We're talking over $100 a shot. And when those start going off, there will be no ignoring them. So I'm going to try and wrap this up here with this purchase. I have my Cash App already open. I have $20 already loaded onto the Cash App. But don't worry if you don't, because one of the really cool things about Cash App is they'll let you add money to your Cash App account instantly. I have a debit card linked to my Cash App, so I can do that. And they'll allow you to spend that money to convert it into Bitcoin immediately. And they'll let you transfer it to your hardware wallet immediately. All things that services like Coinbase won't let you do. They'll either put a hold on the money you transfer for up to a full business week before they'll let you invest it, or they'll let you ostensibly buy Bitcoin right now, but then they've basically got it frozen. They won't let you transfer it until they make darn sure that that money that you send is cleared. And that should be a wake-up call that any Bitcoin you buy in exchange is not yours, because if they're not going to let you transfer it, because they might have to take it back if your deposit bounces, then you know all you have is an IOU. Again, I don't recommend transferring $20 of Bitcoin to your hardware wallet, because that's going to be 30-something thousand Satoshis, which might become flat out unexpendable one day. I usually wait till I have a couple 100,000 Satoshis, but that's a different subject and something we've covered in depth on previous episodes. So I already had the Cash App open and closed because I've been yammering so long. So let me open my phone back up. Tap on Bitcoin, tap on buy, enter $20, enter confirm, and boom, just like that, we've stacked another 32,413 Satoshis, more than 200 sats, more than we were able to purchase last week. Bitcoin went up a little bit while I was talking. We stacked at a price of $60,316, but that is the cheapest that we've stacked since back in May. On May 8th, back in on May 1st, we managed to do a stack at $57,918. But I digress. That stack of 32,413 Satoshis raises the total stack to, our total stack is now 9,548,239 sats. It did increase our average purchase price by about $100, $100.30 to be specific. And that means that our average purchase price is now $32,257.27. But still, that's basically about half of what Bitcoin's current price is. And when Bitcoin goes on that face-melting bull run, if it goes up to 100,000, that'll be 3x what our average purchase price is. If it goes up to 300,000, that'll be 100x. 10x. What our current purchase price is, and that's not too shabby. So looking at our customary moonshots, when Bitcoin eventually hits 100,000, which I believe it will do probably this fall, if not sooner, then that stack of 9.5 million sats will be worth $9,548.23. So definitely not too shabby, considering what we've converted only $3,080 into that stack of Satoshis. If Bitcoin hits $1 million, which is kind of the moon for many, many, many people, then that stack of 9.5 million Satoshis will be worth $95,482.35, which is a heck of a nest egg, considering that the average American has less than $500 in savings. And that's an old number. That's before things really got ugly financially. Who knows what the average American has in savings now, but it was only $500. And $95,482 would be a significant improvement over that. A couple episodes, we mentioned that Fidelity's Jurrien Timmer has predicted an ultimate price of Bitcoin of more than $1 billion. If he's right and Bitcoin does achieve $1 billion one day, even without stacking another sat, that 9.5 million sats would be worth $95,482,350. And that's life-changing money, even for a person like Michael Saylor. Certainly life-changing money for me, and life-changing money for, I imagine, most of the people listening to this podcast. But again, this is more about this is less about getting rich quickly and not getting poor slowly. What we're really trying to do is preserve our wealth, to build what will one day be generational wealth that we can pass on to our children, onto our grandchildren, when their fiat ice cube continues eroding, continues melting away, when we eventually see the US dollar just hyperinflate and collapse or get, revalued, repriced. They do like what they did in the Roosevelt administration, where they confiscated all the gold and revalued the US dollar, or like they've done in plenty of countries. Those of you listening, Argentina, have seen your currency devalued numerous times. And the idea is, here in the United States and Europe, where we still have a relatively stable currency, even though I believe the inflation rate is more like 15 or 20%, not the 3% that they're claiming, that's still a lot better than the hyperinflation of more than 100% that a lot of you have experienced. So, all right, fireworks are popping out there, so I do want to wrap this up. But before I go, I do want to ask you to help support this podcast, and you can do so in one of many ways. For example, you can contribute to this podcast through the value for value model, pay back some value for the value you feel that I have given you. But you can also help support this podcast for free. You can help support this podcast, get paid to do so, by scrolling through the show notes and signing up for any of the following services that we have in our show notes, such as Fold, the Fold card, such as Cash App and Strike. But the best way, the most important way probably that you can help support this podcast, as I've mentioned over and over again on previous podcasts, is by feeding that algorithm monster. And you can do so by just simply rating and reviewing this podcast on whatever podcast platform you are listening to. Of course, that varies from podcast app to podcast app, but a simple rate, a simple review helps more people be exposed to this podcast, because the more ratings and reviews we get, the more listeners we get, the more likely this podcast is to just pop up in some random pleb's feed. And then maybe they will start listening to this podcast and realize that, hey, I can start stacking sats for as little as $20 a week too. And you will have helped orange pill a new pleb, help bring someone into that life raft through that escape hatch, simply by rating and reviewing this podcast. You can also help feed that algorithm monster by following us on Twitter. Please don't forget to follow us on Twitter. On Twitter or X, we are at BTC Bulletin Pod. And again, that helps feed that algorithm monster. And right before I said Twitter, I heard of that pop come through my earbuds. And that wasn't one of those huge artillery shell style fireworks that the neighbor Airbnb likes to cook off. But they're getting louder and closer. So I'm going to wrap this up. Besides sending us a boost type shout out, which I will read on the next podcast if you do send us a boost, I just like to hear from you. I like to know who you are, where you're at, who I'm talking to when I'm sitting here in front of my laptop and talking into this microphone. So by all means, send me a boost if you do feel that we have provided you value in this podcast. But if you, don't feel like parting with any of those precious sats, you can contact me in other ways. For example, follow us on Twitter at BTC Bulletin Pod and send me a DM. I check I check Twitter all the time, and I do respond to all of the DMs I get if they're not scams, if they're not the pretty Asian women asking how my trading is going. So DM me at BTC Bulletin Pod. And if you're not on Twitter, we're also on Nostr. The NPub is in the show notes as well. And if you're old fashioned like me and you just like to use email, you can send me an email at bitcoinbulletin@protonmail.com. That's bitcoinbulletin@protonmail.com. I have that email open right now. I do read that email. I do reply to every single email I get. And I want to hear from you. So send me a DM, send me an email, send us a boost, whatever you feel most comfortable doing. But let me know what you think about this podcast, what you like about this podcast, what you don't like about this podcast, where you are on your Bitcoin journey, or just your thoughts in general. But either way, don't forget to join us next Wednesday and every Wednesday while we keep growing that stack together, as long as someone's willing to let us trade them filthy fiat cuckbucks for Satoshis. But until that time, have a fantastic 4th of July weekend and keep on stacking those sats, you sexy sat stackers.